almost a year since the Central Bank of Nigeria excluded individuals and local corporates from participating in the open market operations auctions, and have Bankole Odusanya is the head of fixed income and trading at UBA. He joins me now to assess the impact on the money markets. Thank you so much for your time today, Bankole. Definitely, we know we had T-bills primary market auction today, and also off the back of the fact that we're close to a year since we saw those OMO auctions play out then, but the exclusion of local corporates and individuals. But I'd like you to speak to the impact on the markets.
What has happened is that we're seeing more interest in today's NTB auction because we had seen decline in yields at the Nigerian Treasury bills auction, which was very rapid in the last few months. What happened was that there was apathy at the Nigerian Treasury bills auction. But what has happened now is that we are seeing the convergence between OMO auction rates, OMO at the secondary market, where OMO is being sold at 3.05 and 3%, and where the primary markets for the Nigerian Treasury bills are. So this convergence now makes it more attractive to go in aggressively for the Nigerian Treasury bills. The results are not yet out, but we have envisaged that it's likely that the one-year Nigerian Treasury bills would come out at the auction today at below 3% because of the huge demand that we envisaged and actually saw. And don't forget that the Nigerian Treasury bills is one of the bills that is accessible to all local corporates. So that's the reason why the demand is so high. And the rates have also converged with secondary market OMO rates also, with savings deposits declining to as low as 1.5%.
All right, definitely quite an interesting market to look at there. But what do you make of the return of sales to the FX, to the BDCs, and how that is playing out in the FX market?
Well, it brought some reversal in the value of the Naira. We're currently at 440 even at the parallel market. What is happening is that the central bank is selling 10,000 to each BDC on Mondays and Wednesdays. But from what we have been able to gather, the documentation required to even make these sales are very strict. The returns being made to the central bank are very, very strict concerning who's buying, who's traveling. And you know that it's not yet full flight for all the airlines. It's limited, and you can't just present any ticket to say, oh, you're traveling somewhere. It's highly, highly, highly and strictly regulated. 10,000 naira for each BDCs on Mondays and Wednesdays. However, their returns there's a new communique that states that they need to show the travel document of a fitness for purpose of the scale that they are making. So it's actually also very, very, very regulated.
Yeah, interesting times for the market here, but I understand that liquidity has been the story when you look at what's been playing out so far. What are your projections for liquidity going into next week?
On the local currency, the system is not very liquid. There were some deductions between the FMDQ and the central bank. Liquidity is as low as 100 billion, and we are seeing overnight that double digits again. Federal allocations are expected to come in next week. But besides that, between 14th and 27th of September, we're going to see about 200 billion coming for various bonds coupons. 6 different coupon bonds the federal government bonds will be receiving their coupons between 14th and 27th. We expect some of these funds, or at least half of these funds, to be plowed back into that line of investment that is yielding this return, meaning that we'll see some bullish or some buying at the bonds market. At the short end already, we are seeing some demand between the 2025, 2026, the 2027 bonds currently. So that's what we see going into the next few weeks. Some inch up in liquidity and demand on the bond side.